Hello and good morning. This is Ahura with another daily outlook video to review the market, see what is happening in the market, what happened yesterday and days before, and what we have to expect from today's in the financial market. Finally, we are in the promised day, and today the 2 days meeting of Federal Reserve will be finished, and we will have the announcement and feature Mr. Powell's press conference right after that, or like 30 minutes after the meeting. There are a few things that we have to follow. First, let's see. So today we're going to talk about a little bit about about the stock market more. There's a U.S. dollar index here. Let's see about the U.S. dollar index and SP 500 and what is our expectations for from this stuff. Uh, First, let's review the market. Let's review the data from last week. What we know is inflation in December a little bit decreased. What we know is unemployment a little bit is increasing with the initial jobless claim increasing in the last 3 weeks. What we know, the housing yesterday we had the housing data. What we know that increasing the house price in United States is decreased, not increasing. The increasing speed is decreased, not the prices are decreased. For example, the house price index monthly in November was unchanged, and house price index in November in yearly base, in annual base, was 17.5%, which was last month before that was 17.4%. House price index was 362.4. The month before was just 358.4. So we can see that not much differences. I mean, that increasing slower comparing to increasing fast increasing other months, it is slower. And CB consumer confidence was lower than the previous month, 115.2 at 113.2. I mean, the previous month was 115.2. This month for the January was 113.8, while the expectation was 111.8. So it means that the market, the consumer confidence is getting better. It means that economy is a little bit fine. It means that inflation in housing prices decreasing. It means that the unemployment rate is a little bit can be increased from last month, which was 3.9%, may can go to 4 or 4 even 1%, or even 4.1%, because initial jobless claims in the last 3 weeks is increasing. Therefore, this is the data what we have. Yeah, we have another data in front and we have to take care about them as well. However, this is the data so far we have. Another point, another point about the earning reports. So far, the earning reports were amazing. Yesterday, almost all the major reports they were better than expected. Just look at the Microsoft, Jason and Jason, Verizon, Nextera, what written technology. All of them, they beat the expectations, and all of them they were better than expectations in the EPS earning per share. But in a revenue share, the little bit we had a little bit weakness. I mean, not the weakness, lower than expectations, but it was still increasing for the Jason and Jason and for Nextera Energy. The thing is that generally, market is doing fine. Consumers' confidence is doing fine. Generally, the earning reports, the company is doing fine. Generally, the employment market is fine, but need a little bit more support and help. So this is what we have, and this is and today we have the reports. We have the another reports. Tesla, which is very important in earning reports. Today we have AT&T, today we have Intel, today we have Boeing, and tomorrow is also other giants. The giants report gonna be here this week, and they're gonna be very important to watch. So this is what we have in the market. And here is the chart. Here is the SP 500 chart. In the daily chart, look at here. We can see the market volume is lower than 20 moving average. 20 period moving average. Usually it means that we need more. Usually it means that the price can increase when the moving average is above market volume. MACD also have same signal technically. Fundamentally, we have three scenarios. Either the first scenario, I will talk about the three scenarios and I will tell what will happen if we see that. Okay, let's go to the daily chart. Here is the daily chart. I will talk about the three different scenarios and the possibility of the reaction, the possibility reaction that we're gonna have. The first scenario, Federal Reserve will end. It's so hawkish. Federal Reserve will end the QE a little bit much faster than March. Then we're gonna see much deeper low levels under here, under 4,200. This opportunity, this possibility is not too high. I can say it's like 10%, 10-15%. The second, which is almost 70% market expectation, is that Federal Reserve do not change anything in the QE plan and will end the quantity purchasing, will end the buying the bond purchase plans at the middle of the March as it is planned right now and it is going. But to start increasing the rates right in January, right after ending the bond purchase plan at the March. So in first 25 basic point increasing the rates will be in March. This is the 70% of the market expectation. What's going to happen? We're going to have side movement and most probably and increasing the prices from this level. Side movement and increasing this from this level. Why? Because the market already priced in a 4 rate hikes thanks to the JP Morgan, thanks to the many other the Goldman Sachs, thanks to the some members of Federal Reserve. They already confirmed in their speeches that they are giving this expectations to the market, giving this outlook to the market participant, to the investors, that we're going to have to increase the rates for 4 times, each time 25 basic points in 2022, and we're going to rule over the markets. So this is the expectation, and so many investors and analysts and believe that game, and they are pricing too much on increasing, tightening policies. Therefore, if they go through just one rate hike in March and ending with no change in the QE plan, therefore the market will get it as a positive report. Therefore, we're going to have the side movement and increasing the prices from here. And the third policy, which is my expectation, I do not expect to see any changes. We are not going to have any changes, and most probably Federal Reserve will stay hold, and it means that we will not see any change in the interest rate, we will not see any change in ending the QE plan, and they will say that, okay, you know what, let's wait for the next meeting and let's decide in the next meeting. Let's see what is the effect of these policies and what the economy going to do with them, and then we're going to decide in the next meeting. Then it will be very positive for the market, and we can see not the side movement and increasing prices. We can see increasing the prices faster. Same thing for the SP 500. Same thing gonna happen for the Nasdaq. Same scenario is for Dow Jones. The same scenario we're gonna see there. In the crypto market, in the currency market, let's go in the currency market. This policy, if the first policy happens, like ending the QE faster, increasing the rates, we're gonna see the US dollar index much higher, above 90, maybe 97, 98. If the second scenario is if the second scenario, which is the increasing the prices one time at the base 125 basic points in the March and the ending the do not change at the QE plan, we're gonna see the US dollar a little bit at a weaker position. But still it is a tightening policy. Therefore, still in the midterm, we're gonna still see the US dollar to increasing back. So we may probably see the US dollar index above 95, but around the 95 a little bit, maybe even the less. But still is a positive in the long term. We can see that it will stay still positive. We will not probably see at the 94, but probably put it 95, 94.50, or something like that. But not some levels some here. But overall, it will be the positive. Uh, in a longer term. But if the third scenario happens, we're gonna have the lower, less dovish, I mean, more dovish policies. Then still I mean, not changing in anything. Then US dollar index may decrease a little bit more, but still again, US dollar economy is increasing, and increasing the rate hike comparing with the other economies, it will make carry trade, and carry trade will increase the US dollar rate. This is what is here, and what is going to happen, and what is our expectations in general. Okay, let's go to the Euro USD dollar. Euro USD in the first scenario will be much lower, under 10, 1.10, around 1.10, 1.11. In the second and the third scenario, US dollar, Euro USD will be between 113 and 114, 113 and 114 point, not much. Maximum we can see 114.50, something around this area. But still, as I told, increasing the rates in the United States and holding the rates in the Europe, which means that the euro will be lower in the weaker position against US dollar. In the cryptocurrencies market, let's check the cryptocurrencies market. Cryptocurrencies market had same scenario, the same thing that happened in the stock markets. You can see this is the SP 500 chart, and this is Bitcoin in the last days. It doesn't mean that they are going to move same. No. It's just in the last days that is the market sentiment. The Bitcoin is in a side movement right now around the 37K. If we see that more tightening policies from the Federal Reserve in the first, it may put the pressure on the Bitcoin as well. But the Bitcoin, the cryptocurrencies, they confirm that they do not have that much relation with the other stock. They're gonna move in their own way and whatever they want to do. So therefore, sorry. Therefore, overall outlook still for the cryptocurrencies market is negative. Even if they increase a little bit in the short term, it is negative. Unless if the Bitcoin can confirm itself around above 45, 46,000, something around here, something above here. If Bitcoin can confirm itself above 40, 46,000, it will be then it can change it can change the direction. Otherwise, under this level, still we're in a very negative outlook. Same thing for the Ethereum. Same thing for Ethereum. The Ethereum tested to less than 2,200, and now we're in 2,400. If we go to the daily chart, we can see very important level around here, 3,400 almost. As this the last days are also we talked about that. This 3,400, under 3,400, everything is about the downturn. For the Ripple, 67 cents is the first here, lower than 67 cents. Let's go to the daily chart. Can you see the breeder? Yeah, 69 cents. 69 cents is the K resistance right now. Yeah, it's a 20 daily moving average as well. It's it is right now the no, it's a 14 moving average, not the 20. It's a 14 moving average, 14 period moving average. It is 14 period moving average, and it is at the 6.69 cents. Yeah, the 69 cent is the key resistance, and anything under 69 cent is strongly on the bearish side. This is generally the market situation, and everything today in the market will depend on the Federal Reserve policies and the Federal Reserve decisions. Therefore, I'm not going through any other stuff because everything will be about that. And then when we have the results from the Federal Reserve, then we're going to talk what is exactly happening in next days, and tomorrow with the more data about the Federal Reserve decisions, we can talk more in detail. See you guys tomorrow, and take care. Have a good trades. Bye bye.